Good afternoon, everybody. This is Olga. I think Dr. Yu will not be able to join us today. He's in surgery, and John might be in and out. So we'll start in a little bit, and we'll give a few more minutes for some more people to join.
Sounds good.
Everybody to this week's meeting and update. I think I will get started with my update first. I hope everybody can see the screen. I have been working a lot on the AppFolio implementation. We had a little bit of a miscommunication with them, but it was resolved about the way their accounting software works. We're moving forward. This week we need to get all of our data into the software. We will be reaching out to grant partners to get additional information if we need any. We might be missing some leases that we need. So if you're a grant partner and you know that you need to send us some leases, please go ahead and be proactive to do that so we don't have to go back and forth to get it. Please, again, make sure that you're dedicating some time to training and to watch the videos. I have shared the link last week, but if you need it again, please let me know and I'll send it to you. And we're shooting to go live by August 1st or sooner if we can make that happen. That's pretty much my update for today. John, are you on the line? Do you want to go over your update?
Sure. Yeah, I can do that. So with B2R and our final stages of the refinance, we are just going through the insurance options right now. And since we're only getting quotes for 18 properties, and yet we have somewhere around 65 or 70 units that would qualify for these quotes, I am going back to them and asking them to give me quotes, for this larger, just the entire portfolio, so that we get, take advantage of as much of that pool as we can. So they are going to, by tomorrow morning, I should have those quotes and basically make a decision. And it looks like the one that B2R had provided initially is probably going to come in the best. The only anomaly there, which is just kind of an interesting thing, is that they're cheaper than my current insurance or our current insurance right now on almost all properties, except in Birmingham, they are more than double what we currently pay. And I'm not sure what that speaks to in terms of if our coverages should be the same. So not sure why that underwriting has spit out those numbers. And so I'm going to contact them and see if we can't normalize that as to the other quotes that we're getting. Go ahead.
Sorry, I was just going to ask, do we have to have all of the properties under the same insurer?
Only for the portfolio that we're refinancing. So no, we don't have to, but it's just to our advantage that we take advantage of a larger national firm who can handle all of our properties, because we're going to, the assumption is we're going to get a better rate if we are doing many properties as opposed to just, one or a few.
Sure. Okay.
The second update that I had is already a little bit out of date in terms of what Olga just went over. We're going to move forward with AppFolio. So although I had sent a template to a couple of our ground partners to use for rental income, I think we're going to bypass that most likely in the next month that we go around with the rents. Hopefully we can have AppFolio up and running. So we'll see. But anyway, it's this trying to create as much of a way of streamlining those inputs into our systems as much as possible. So that was kind of an interim step that we'll probably skip. We have many closings this week. We have 5750 Garfield in Cleveland, which we're closing today. The wire's been sent, the paperwork's been sent, and that is going to be followed up actually early next week by 110 Libby in Cleveland as well, and that's through Devor Ram and his group. And then we also have, and if George is on the line, I'm sure he'll go into this, the 122 Nearlands Vista. We've had a little bit of issue with title on that, getting title insurance, and so that is, I think, in the very final stages, and looks like we're going to finalize that today and probably close the next day or two. So George will update on that.
Yes.
Okay, so beyond that, I don't really have anything to update on.
John, there's also Avenue L. Sorry, Olga. There's Avenue L as well, if you're aware of, right?
Yes, that's Thursday, right?
Thursday this week, yeah.
Okay, thank you.
A lot of closings this week.
Yes.
Okay, so let's move on to managing partners. Chad, do you just want to do yours since you're already on?
Yeah, sure. So maybe we should have done this right at the beginning. Nathan is waiting, I think, online here. So the last, I don't know, it's probably been like 6 months now for me. I've been getting really interested in notes, and I reached out to, or I went to a seminar a few months back by Nathan that's on the line, and he was doing a presentation on how we all worked, and he was kind of looking for joint venture partners to join with him and what have you. And so I've been in communication with him the last little while, and then it kind of dawned on me. I thought, you know what, it might be a good opportunity for EAC to prosecute a joint venture in some regard with Nathan. And so I reached out to him and explained the program to him. And he thought, you know, it might work for what he's looking into. And so I won't take too much longer. I'll introduce Nathan, and I'll put you on the line, Nathan. You just have to unclick your mute button up on the microphone. And okay. Olga, do you have controls right now of the?
Yes.
Could you give me control by any chance? I'll put up the spreadsheet.
Yes, I think. I think you can try now.
Okay, can everybody see my screen? Yes,
no, I do not.
Not yet.
There's something I have to do here to get it to come up. Share my screen. There we go. Well, see it now?
Yes.
Okay. All right, so Nathan, if you're on, if you want to just maybe explain a little bit about your background and how you've come to this point in your note investing career, and once you've done that, maybe we can walk really quickly through the spreadsheet. I know it's just a summary, but at least you can try to explain how the different access strategies work and the types of returns we can look at here.
Sure. Can you guys hear me okay?
Yeah, go ahead, Nathan.
Yeah.
Okay, great.
Someone else should shut their phone off. I can hear a lot of background noise. Put it on mute. Sorry, Nathan.
That's good.
Yeah,
so I got started, so I'm from Canada. I live just outside of Montreal. And I actually got started in notes somewhat by accident, which is often the way things go, it seems. But in 2008, I was contacted by a friend of mine who lives in California. And he was asking if I would help him to manage a portfolio of houses that some investors had bought in April of 2007. So worst time they could have bought anything. And by the fall of 2008, they were in trouble with trying to get rid of these properties that just weren't worth anything anymore. So after some analysis and after kind of looking at what we had, we had kind of come up with a program where we were selling these houses based on monthly payments. And what we didn't realize at the time was we were actually creating notes. And then as we kind of got more into it and studied some more about it, and as we were looking for people to sell these notes to, we found out that it's quite a bit bigger of a business than we knew existed. So by 2010, I was still in the more of a property mindset, and so my partner and I had a project going in Columbus, Ohio, where we were buying non-performing notes and REOs and getting the properties and creating notes on those again and working toward selling those performing notes at that time. So that was kind of my introduction to notes in general. Last year then, I think it was about March or April of 2014, I started actually working for the hedge fund company that I had been buying these notes from, which was a great experience. It got me to be able to see kind of the other half of the business and see how the hedge fund companies deal with these notes and what their processes are. So that was really good. And then at the beginning of this year, the downside of that, I should say, the downside of that is for that whole year I had all this tremendous experience, but I didn't buy any notes. So I had what I had in Columbus, Ohio, and it was working okay. We were dealing with property issues, the way that properties often go with renovations and tenants moving in and out and all that kind of thing. So I hadn't bought anything for a long time, and at the beginning of this year, I decided that rather than being in the sales side of things, I'm not much of a salesperson. I don't really enjoy that. So instead, I started just teaching specifically Canadians on how to get involved in the note business, how it works and what the different strategies are and that kind of thing, and gathering up different partners that are coming in with money, and I'm doing the work. The work involves everything from finding the notes and choosing ones that I think are going to be best to buy and negotiating all that kind of thing, and then working out the notes with whatever extra strategy is going to work best for that particular note. So that's kind of how I got started, and like Chad said, we met earlier this year, and he was saying that this is something that your group might be interested in, so that's where I've come from. That's who I am.
And I should jump in and mention, Nathan, that you're teaching Canadians how to buy U.S. notes. There's no such thing as notes in Canada.
That's correct. Yeah.
Well, there is such things with the banks. There's only 5 banks, basically, and they hold on to everything. They don't sell them off to other people. They keep them all in-house, so there's no notes floating around on the secondary market.
Right.
Yeah.
So, Nathan, could you maybe briefly walk us through the process of how buying a note and making money on it works?
Yeah, sure. I'll try not to take too much time. I don't want to take over your call here, but
briefly, just sort of an overview.
Sure. You bet. Okay, so one of the biggest things.
You want to look at an individual note, Nathan?
Go ahead.
Sir, do you want me to put up an individual note? Maybe you can walk through that process.
Sure, that'd be great.
Right here.
Yeah.
Let me just look at this first one.
Sure. Sure, yeah, that's good. All right, so one of the biggest things to kind of wrap your head around in notes is that when you're buying a note, you're not buying the property per se. What you're buying is paper. It's the loan that's attached to a property. The property is the security for that note. And it takes a little while, even for myself, just to kind of get your head around that, of what that means. Basically what it means is when you buy a note, you become the bank. So I get questions all the time about, well then, are you dealing with the bank after that and things like that. When you buy the note, you are the bank. And that's a really great position to be in. As the bank, you have all kinds of extra options that are not available when you're only the homeowner. things like you can do a loan modification, and that's the first one that Chad's got up there. Loan modification just means that, let's say that, so in this case, the original loan amount on this property was $93,000, and the current value of that property is only $42,500. So it's way underwater. The unpaid balance is still just below $90,000, so it's way underwater. We don't know exactly why the person stopped paying on the mortgage. It may simply be because it doesn't make sense to pay anymore. There's all kinds of different reasons, but for whatever reason they stopped paying. The loan modification just says that you speak with the homeowner and you work out a new deal. We say that why don't we bring that back to market value or slightly above or slightly below. It's really wide open. You can do all kinds of different things in a loan modification. You can adjust the interest rate. You can adjust the amortization period. It's really wide open. So it's a lot of fun because you can really modify the numbers to make them do almost anything you want them to do. So it's pretty cool. And that helps the homeowner stay in their house, and you get a cash flow, but you don't have the same issues that you do as a landlord. As the bank, you don't fix toilets, you don't fix roofs, you don't have any of those kind of liabilities or any of those kind of challenges. All you do is you collect your monthly income. Again, you're the bank, so that's a nice position to be in. So let's say the person, for whatever reason, is not able to make any payments. You may, in that case, move on to a short sale. Short sales traditionally, I'm sure most people are aware on this call, but is where the homeowner is negotiating with the bank to sell the home, whatever they can sell the home for, that will pay off the balance of the note. It has become increasingly difficult to get those done with banks, but again, in this situation, you are the bank. So you are even in a situation where you can approach the homeowner and suggest a short sale. Maybe that's something that will work better for them. Again, this is an option I really like because you never take ownership of the property itself. Throughout the whole process, you're just the note holder. So all those extra liabilities don't apply when you're owning a house. Somebody trips and falls and can sue you or whatever, that doesn't apply. You're the bank. So that's a nice one as well, and returns can be quite significant in that case. Oftentimes it's one of the fastest ways to get your money back. If they don't want to do a short sale for some reason, perhaps maybe they don't live in the house and they don't want to deal with that, you can agree with the homeowner to do a deed in lieu of foreclosure. So that says that instead of going through the whole foreclosure process, the homeowner agrees to deed the property over to you, again, in exchange for wiping out the mortgage or paying a small portion of that, or sometimes it's even cash or keys where you pay the homeowner in order to get this done quickly. That's mostly what I did in Columbus, Ohio, simply because I was after the property itself. I wanted the property in that case. I've shifted my thinking since then. I would much rather not ever own property. If I need to do a deed in lieu of foreclosure and take back the property, I'm not interested in doing any home renovations or anything like that. It's much too complicated and too labor intensive. So I would rather just take the property back and put it straight on the market and sell it right away. And then, of course, there's foreclosure. If the homeowner is just being completely unagreeable and you're not able to work something out, or say if you're not able to locate the homeowner, that does happen sometimes where they've moved out and they're just kind of in the wind and it's not possible to contact them. Then you'd have to go through a foreclosure in that case. And the foreclosure, I like to think of it as kind of, it's at Halloween time where you got your bag of candy. By Christmas, all you have left is suckers and you know, all the leftover stuff. It's still candy, it's still good, but it's not quite as exciting. You can still make quite a bit of money on it, and it's really good, but it's not quite as exciting as anything else you can do.
So Nathan, can we walk through the numbers? So this property is, the balance on the mortgage was $93,000, something like that, right? How much do you buy the note for?
It goes by the market value. Unpaid balance is almost irrelevant. It's not quite irrelevant, but it takes a major backseat. Like I said, our worst case scenario is that we're going to have to take the property back in some way, shape, or form. So we've got to base whatever we're buying on today's market value. That's what we're going to have to deal with if we take the property back. So in this case, at a 42.5 market value, probably about 40% of the market value, so around $17,000.
So you would pay $17,000 for this note? Correct,
yeah. And again, the thing to remember is you're buying the note, so we don't own the property yet. All we own is the paper with the house's security.
Right. So this is the first lien. You're buying the first lien for $17,000, and then from there you do one of the either modification or some way to get and this we are talking about a non-performing note, right?
Correct. Yeah, that's right.
Okay. So what are the typical expenses to get it worked out?
Yeah, expenses actually pretty minimal. I mean, obviously there are expenses, but they're fairly minimal. We put in there like due diligence, for example, before buying a note. I always run a new BPO. I use a company that has a network of realtors. There's two that I use and kind of switch back and forth a little bit. That costs about $95 or $100, and I can get a brand new BPO with somebody who's local to the area. I've never been to Georgia, let alone Winder, Georgia, however you say that. So I get that for about $100, and then the other one that I run is called an O&E report, an owner and encumbrance report. And it's very similar to a title report. The major difference is the O&E report is not insured. However, the company that I use does insure their O&E report up to $1 million. So it's basically the same thing as the title report. Again, that ensures I know who the owner is, who the current owner is, if there's any taxes owing, if there are any outstanding liens. Otherwise, I'm in first position for the mortgage, so not very much comes before me. Property taxes and HOA fees are the only things senior to a first lien mortgage. But I run that O&E report, so I know exactly what is outstanding.
Okay. Nathan, what about homeowner's insurance? You don't have to be named on the homeowner's insurance. If the owner is not paying his mortgages, perhaps he's lapsed his homeowner's insurance policy. What do you do about that?
Right, yeah, that's a very good point. Usually if they're not paying their mortgage and if they're not paying their taxes, they're probably not paying their insurance either. Insurance, yes, you can buy that. Typically, most note buyers don't, and just for whatever reason, I guess personal preference, but yes, that is available, and yes, you can purchase that. And that's down line 30. I've only had to buy it once. I only felt like I needed to buy it one time on one of our properties in Columbus, and it was actually only I think it's $43 a month. So I'm overestimating here, calling it $75 a month.
So have you told the crowd about the company that you use to basically do your loan modification with the tenant?
Yeah, that's a good point. So I use a servicing company called Land Home Financial, and they are based in Southern California. I use them for a couple of reasons. Like you mentioned, as far as licensing, not all states require any kind of special license. Some do. So just to make it easier on everybody, myself and anybody else involved, I use a servicing company. Cost is not very significant. I've got in there $35 a month. It's actually only $30 a month, but again, I'm just padding the expenses a little bit. But I use them to to do all the most of the heavy lifting when it comes to talking to the homeowners.
So in essence, what Nathan is doing is that he's a servicing company, is like your contractor in a rehab project. He just turns it over to them to basically work till note. And when we talked a couple of days ago, Nathan told me that majority, or a good minority, but really a majority of the notes that you buy will go through the loan modification process, about 40%.
Right.
So then the note is then performing, so you make it perform. But that is not where the money is made. Then you turn around and you sell that note. So would you describe that for us, Nathan?
Sure, yeah. The monthly cash flow is nice, and even on the monthly cash flow, it's easy to be making 15% on the monthly cash flow. But like you said, where you're making your real money is when you turn around and resell that as a performing note. So that takes some time it's called seasoning. Every time they make another payment, it's seasoned just till it's about at perfection, and that's around 9 to 12 months. After 9 to 12 months, that's considered a seasoned note, and you can sell that on the secondary market. There's lots of buyers for that. The one buyer that I spoke to, an institutional buyer, their average purchase price last year was 84 cents on the dollar. So they were buying, say it's in this case, what was our unpaid balance? So if we brought back the unpaid balance down to the market value of 42.5, they'd be buying it at 84% of the unpaid balance. So like we said, that's really where the real money is made on that.
So we may have Nathan run through the numbers for us, but the reason why we're bringing this to the group is the following. Really, this is just another fix and flip. This is a very short-term deal. But if you run the numbers in any of the scenarios, but particularly the one that's most commonly done, where you make no performance, sell it on the secondary market. But the way Nathan has set up with his current partners, the few that he has, is a 50-50 split of everything. But even at 50-50 split, what we as investor partners potentially could make, making 12% annualized return is very easy to do. But when we look at the numbers together with the current projects he's doing, the returns are typically in the 30%, sometimes 70%, and occasionally 100%. So if you look at the numbers and are able to follow them along and think about doing many projects like this, this is a fix and flip sort of scenario where the returns are going to be higher than our current actual buy and fix and flip to sell a home. And so if you also look at the risk we're taking, because Nathan is buying these properties sometimes less than $10,000 a note, could be less than $20,000. I think there's some notes he's buying somewhere around $30,000 or $40,000, but that's where he plays. That's his niche market. But for us to do a few deals with Nathan and see how it goes, it would not be a whole lot of capital. But the
barriers are pretty low.
I'm sorry, Nathan, I interrupted you. Go ahead.
No, I was just saying barriers to entry on this are pretty low. And Chad's got on the spreadsheet here. This is an average for the summary for the 10 notes that I sent him. There are available deals that are out there.
Yeah, I just wanted to see what it would look like if we did like more than one or two, like if we got into doing it, like what would it look like to do a pool of funds? Not that we would start off with this many. I just want to see what it would kind of look like averaged out over 10 of them in this case, just to see what the cash-on-cash returns and the annualized returns would be. And if you look at the worst-case scenario, which would be the foreclosure, even at, there might be some dogs in there that might go longer than 12 months or I guess we got it at 6 months, but even if they go 12 months, the cash-on-cash return is 40%, and if we do it within 6, that's an annualized return of 80%, so that's still a pretty good return, right? loan modification that's looking at 65%, and that's if we do it within 12 months. So they're there's very, very good returns there over the when you average them out. So
do you focus on specific states for these loans, or do you do it all over the United States?
Yeah, that's a good question. I do all over. I do have a preference, though, for non-judicial states. Again, if we do have to go to foreclosure, it's done a lot quicker. The quickest by far is Texas. Well, not exactly by far, but foreclosure in Texas can take 30 to about 45 days. So it's really fast. Right now, the longest, New York City, you're looking at 3 years. New Jersey is not much behind that. So I avoid those states, but there are many that are a lot shorter, where you can get a foreclosure done in 2 to 3 months. So
that's what I was wondering.
Yeah, I prefer them, but I don't shy away from too many states.
So what is the most challenging part of the strategy?
That's a great question. I think the most challenging part is, well, okay, so because we're dealing with people, and their most prized possession in many cases, that can be difficult. You may have to have a tough love kind of a conversation with them to say, this house just isn't working for you. I think it's time for you to move on. And that can be tough. The way around that, and I haven't done this yet, but I know many of my colleagues do this, where rather than starting with a loan modification and seeing if they can get the borrower to agree and taking some time to do that, they'll actually start foreclosure proceedings right away and kind of force their hand a little bit to say, if it's already in place, we can stop it, but you have to show me that you're serious and make some real strides at making something happen. And that way you just don't waste any time.
So the modification process, you would say, is more challenging than selling the note once you're done with it?
I think it can be in a lot of cases. At the same time, though, I've heard of, I remember when I was selling these notes, there was one that we sold, and it was in Texas, and the gentleman that was living in the house had actually set aside all of his monthly payments that he was supposed to be making because he didn't know where to send them. He wasn't ever clear on where he was supposed to be sending his money. So when he was approached about doing a loan modification, he already had all his money saved up, and he was ready to start making payments again, plus all the arrears that he hadn't made.
Okay, I mean, let me clarify. So once you got the loan paying again and it's seasoned, so you turn around and you need to find a buyer for it. Do you have some buyers lined up, or is it a difficult process to get someone to do it? And then also it looks like on some of the options here you have 80% as or 20% as a discount, and another 10% as a discount. So what is a typical discount that you can expect?
Sure. So the first question, yeah, I do have buyers lined up, both what I call institutional buyers and just private investors that buy performing notes. So I do have some of those guys lined up. As far as the 80 or 90%, 80%, put it to that's for the loan modification, and that's shooting low off of that one company's 84%, where they said they would buy a loan, or they said their average rather was 84% last year. So we put it at 80% just to be kind of on the safe side. And then the 90% represents when you're selling the house, rather than selling it for the full price for the market value. That's more just for a quick sale. they're going to sell it at a discount so that we can sell it quickly and get our money back as soon as possible.
Right.
Okay,
so
Nathan, I've got...
when you're selling, go ahead, John.
No, Olga, go ahead. Continue your thoughts.
I just wanted to clarify because so all of these percentages represent the same thing when you go to sell the note at the end of your process. So is 84% more representative of the discount that you have to give, or
yeah,
is that just one person and you find that another number is more representative?
No, 84%. That's the average that this company told me that they paid last year. So I'm just being conservative, calling it 80%.
Okay.
All right, so my question is related to the 4 different procedures that you have here and the paperwork that is involved with each one when you're dealing in different states. Are these things that you already have set up in terms of the paperwork that is going to be compliant with the SAFE Act and Dodd-Frank and all that? Is that something that's done ahead of time?
Yeah. Logistically speaking, again, it's a lot simpler than just selling a house. For example, if we're doing a loan modification, it's not very complicated. It's a modified agreement of the mortgage that they've already signed. So it's not very complicated. It's a much smaller package that the homeowners need to sign. Backing up a little bit, when we're purchasing these, I should mention, normally when you're buying houses, everything goes through an escrow company. With notes, that's not the case. Nothing's done through escrow. It's just done directly with the sellers. Sellers in most cases are hedge funds or note servicers that are selling for their clients.
And so that's just done through an attorney?
Yes, that's right.
Okay. All right. And what kind of vetting process do you go in terms of making sure that the original note that you have is actually legitimate and in compliance with SAFE Act and Dodd-Frank?
Yeah, most of these notes were written before Dodd-Frank even existed, well, in its current form. Most of these notes were written probably between 2000 and 2007. It's all the run-up that we all kind of witnessed. It's during that time. So they were compliant with the laws at that time, and because we're not writing any new notes, the same Dodd-Frank requirements don't apply. We're just modifying an already existing. So that makes our job a lot easier.
And Nathan, do you not have the company that you're using, the service company, do most of your paperwork for you? Isn't that what you're paying them to do?
Exactly, yeah.
Is there a reason why you chose that company over, say, like FCI?
Yeah, FCI, I'll be totally honest, I've never used them myself, but from friends that I know that have used them, I haven't gotten very good reviews. They're not super impressed with them, and so I decided to use Land Home, which did get good reviews from peers.
Nathan, one of our investors is asking, where do you get the notes? Where do you buy the notes?
Yeah, I get them from different hedge funds and like I say, from servicers. I don't really want to tell you which ones specifically. That it took me a few years to kind of get those contacts, so that's something I'll kind of keep to myself. I'm sure that people can find those if they look around. But I'm going to keep myself in the deal here.
Yeah, Nathan, regarding the exit strategies, what's the breakdown of each exit strategy that you've seen? Like, is 80% of your 80% of your notes just resold at a discount, or is there a general breakdown?
Yeah, good question. So yeah, so this I asked the same thing to Land Home just to see what is kind of the general breakdown. Roughly speaking, about 40% of the time it's a loan modification. 40% of the time it's either a short sale or a deed in lieu, and the remaining 20% of the time it's foreclosure.
Okay, Nathan, one more question from Linda. She's asking who's actually doing the workout with the borrower. I'm guessing she wants more clarity on the company that you're paying. Do they do most of the process, or do you have to do some of it as well?
Yeah, they're doing the actual speaking to the homeowner. It's of course under my guidance and my review. They won't make any modification without my okay. And that's something we talk about together and say, okay, so on this note, we're going to, try for a loan modification. These are the kind of terms that I think will work, and we'll negotiate with the homeowner from there. And we, meaning the servicing company, so they're the ones who do the actual speaking to the homeowner.
So Nathan, let's do this. Why don't you, Chad, can you create a Dropbox folder for Nathan with Nadell? And can you guys upload the spreadsheets and the sample deals? Can you also send us, Nathan, your JV agreement so that we can review it? And
sure.
then give my community a chance to look through it and kind of study it, and then let me get back to you. If we like the agreement, we'll go with it. If we want to modify it, we'll present it to you. And then once we get a JV agreement in place, let's do a deal together. And we'll start with something small, and we'll just kind of do one at a time and see how it goes and see if it does perform as well as you say it does.
Sounds good.
But let me give everyone a chance. Maybe Linda has another question, Olga, or John, do you have more questions?
No, I don't have any more questions.
No, not right now.
Okay, Olga, if you want to go on to the next item on the agenda.
Okay.
Okay.
I'll hop off. Thank you so much, guys.
Thanks, Nathan.
Over. Let's see, I'm gonna I'm trying to share my screen again, but I can't. Chad, I think you have to disconnect somehow.
Yeah, I hit stop sharing. If you go to the top,
you need to make Kevin you the presenter again.
Oh, do I? Oh, okay, how do I do that?
Right click and then change role. Oh, okay, I think I can do that now.
You got it? Okay.
Okay, so here we go. Bill, you're next up. Wilson, are you here?
Yeah, I'm here.
Okay. Do you want to go over your stuff?
Yeah. So for a property on UPass with RBD, still really no update. They submitted their permits last week, and it can take up to 4 weeks to get those approved. So they actually haven't done any work at the property yet. So as soon as they get the paperwork approved with the city, then they'll start working on it. And again, Roger reiterated that the exit strategy is still 6 months. So from the time we gave them their money, they plan to cash us out at the 6-month mark. So if I get any more information or pictures or updates on the actual progress of the deal, I will provide those. And that's all I have for RBD. For St. Louis, we had a single-family flip we were planning on doing in Overland, and that fell through due to city inspection. Found that it would actually be a 2-bedroom house instead of a 4-bedroom house. So we're currently waiting for some new prospects from one of the wholesalers that Mary's working with. Haven't seen anything yet, so we're just waiting to get something back from her. Then also I've been working with Tony Bonawat out of Las Vegas. He sent over a 57-unit multifamily deal, and kind of going through the numbers now. Really trying to hash out with him what kind of agreement, whether or not, you know, both parties are on the same page as far as percentage breakdown and whatnot. So I haven't heard anything back from him yet, and we'll kind of go from there. And that's all I have.
Okay, thank you, Bill. I don't think Lou had joined us. Anthony, are you on the line?
Hello?
Yes.
Sorry
Anthony,
about that. Yeah,
do you have
I
any
was
updates?
muted. Yeah, kind of. And I've been real busy. I didn't get time to upload them yet. But Mike and his crew, everybody's back in South Bend, and I'm moving along. So the fourplex, we started framing, and we should be done with that this week. And as far as the duplex, the interior demo is going on right now, or at least this week. And the guys that repair drywall and whatever smoothing out that needs to be done. So we are working on the drywall / plaster during this week. The garage has already been painted, and the exterior has already been painted as well, at least the first the first coat. So it doesn't look great yet. It still needs probably 1 or 2 other coats, and we'll be done with that. Then as far as active projects, Byron is it's done, but when we finally turned the water on, it appears that it was winterized when we purchased the house, but it appears that it was winterized after the pipes had already burst. And this is a house that's on a slab. And the reason we're suspecting that is we had laid the floors, everything was done. All of a sudden, moisture just begins coming out, and the floors looked wet, not just the concrete itself, but the vinyl plank floor that we had already laid down was looking wet. So we put humidifiers in overnight and our fans. We dried that out, called the city to turn the water off. They're going to perform a test to see, I don't remember what Mike called it, but anyway, we had a minor snag with the potential plumbing, and we don't know as of right now whether it's out in the street or between the street and the house, or actually the plumbing itself that's underneath the slab. And if that's the case, that's going to be fun. I mean, it can be rerouted to go up and above over the ceiling, so it's not a big deal. We just need to figure out where it's going. Or where the moisture is coming from. And the initial tenant that we had, if you will remember, that was a tenant that was a Section 8 at $1,250. And I think Section 8 was paying up to $900, and they were going to come up with the $350 out of pocket. So it turns out when they went to get the voucher or whatever they do, the Section 8 had been cut back from 900, I think, to about 600. So they didn't want to move ahead with it. They had put a little bit of a down payment, so they ended up losing that. And we are working with the second tenant that had expressed interest. So we changed the scenario a bit. It's not going to the first tenant just because for no fault of their own, Section 8 reduced the amount that they were entitled to, and they can't afford it with Section 8 cutting back, however, like $300 from what they thought they were going to get. And at Dennis, that's the one right behind Byron. It's closing on Monday, I think, next week. We finally got a clearance from HUD for closing on Monday next week, and that's going to be just like Byron. And that's one we already have a tenant for. And actually, the tenant for Dennis was someone that initially wanted Byron, but we had rented it out to the people that the Section 8 fell through. But they like Dennis anyway because it has a 2-car garage, and Dennis did not. Byron did not. So that should pretty much cover it for the active things that I'm working on right now.
So, Anthony, John, is Dennis a project we need to raise money for?
Yes, it is.
Okay, Anthony, can you? Is there a spreadsheet on in your directory in your folder that I can look at?
I had started on one. I don't think it's in Dropbox, but if it's not, I will put one together here before. What time is it? 4 o'clock. Within the next 2 or 3 hours, I'll have one up in there.
Yeah, let's do it so I can get this thing funded for you. Okay.
Okay. Yeah, the acquisition from HUD is, I think, at $33,000. So that's what we need to raise, at least for the closing on Monday.
Okay, but we need to do some raising of funds for the rehab as well, right? So what do you think the total bill is?
Yeah. Rounded off, I would say about 56, between 56 and 56, 58.
Okay, sounds good.
On the high end.
Yep. Just give me the, some rundown and a spreadsheet. Let me work on it, okay?
Yep, I'll do that.
Okay.
Okay, should we move down the list? Frank Veliz, is he on the line? Frank, Chad, do you want to give an update for Florida?
Yeah, I'm on the line.
Oh, hi.
Sorry about that. I was trying to get off the mute button here.
Go ahead.
All right. So right now we're almost finished with Emma. We lost a lot of time last week because we had a lot of rain, and there was a loss in the family for my GC. So we shut down the site for a day. So we got backed up a little, but we should be wrapping up on Emma. I already have one of the units rented at 500, and I actually got 3 applications in, which I started marketing the property at 550 just to see what kind of what I would get back from that. And then I actually have 3 applications that came in today. So hopefully, if I can get these. If these are any good and they're approved, we'll have another unit or 2 rented by the end of the week at 550. And we're going into close on Avenue L on Thursday. So that's we're going to get started on that on Monday. So that's what we got going on my end.
Thanks, Frank. John, you have funds for the Avenue L project, right? Because we raised that from Paul Kim, right?
Yes, that's correct.
Okay, sounds good.
Hey, Frank, it's Chad here.
Hey, Chad.
That water heater in Emma, did you end up enclosing that, or did you figure out a price to enclose that thing?
We haven't enclosed it, Chad, and those were out there like that already. They're electric, and once the appliances go in, you won't even see it because the stove and the stove go right next to it, so you won't see those. They won't be as apparent as there is now because the appliances haven't gone in yet.
Oh, okay. But they're electric anyway. They're not gas, so it's not gonna be an issue with the inspector. Okay. No, I just on the pictures it looked like a bit of an eyesore, but if they're gonna be covered up by appliances, then that should be okay.
Yeah, it'll blend right in.
Okay.
Yeah.
Okay. Giovanni, are you on the line?
I'm here. As far as my project at Playa de Medio in El Cajon in San Diego, we are finishing up all the tile work. Cabinets should be going in next once they're delivered by Home Depot. And I do have a guy coming in to modify the granite that's going to go in the kitchen. It's a very awkward layout for the kitchen, a lot of angles, so we have to get that custom made. Can't really just buy a slab for it. But should be taken care of by the end of this week. Everything's moving along. We have another property that's pending in the same complex. I was listed at 319, fully remodeled, and it went pending after 10 days. So comps are still looking pretty strong. And John, I don't know if you want me to go over the numbers or more details on the College Avenue project.
Yes, if you're prepared to, please do, Giovanni.
Sure. So I have a project that I brought up to the team about a month ago, or 3 weeks ago, I would say. It was priced at $429 originally. It's an REO. After doing the numbers, just after resale value just wasn't really there for the amount of work that we needed to do. So I backed out of the deal a couple of days before closing escrow, and the bank got back to my agent and asked me what it would take for me to close the deal. So I threw them a low ball offer at $370. They countered back at $380, and we agreed on that price. So I ended up getting a $49,000 price reduction just by sticking to my numbers. So pretty much pays for the rehab since we had it estimated at $65,000. So we are moving forward with the project. This is one project that will be needing approximately $140,000 just for the gap funding on this one. We're finalizing all the numbers as we speak. So as soon as I have final numbers, I'll get back to John and see if we can get this thing funded.
So Giovanni, is that 140K after Brock's hard money loan?
It is. So Brock is doing $35,600 of the $65,000 for construction. So EAC would need to come up with $29,000 for construction, and the rest is going towards closing.
Right. Okay.
Yeah.
And when do you think your other project, your condominium, is going to go on the market?
I'm shooting for 2 weeks from this week. So we're pretty close to completion.
This week? That's excellent.
No,
okay.
no, in 2 weeks. 2 weeks.
In 2 weeks. Okay. That's still very good. Very good.
It's not bad, yeah. And I do have another one that I'll be talking to John about, another short sale that I actually the offer just was accepted. So more details to come on that one. I don't want to jump into it just yet, but I do have several distressed properties coming up. So that's my update.
Okay, now this College Avenue property, I know you backed out before, but you got a $50K discount. You feel comfortable now with that kind of discount that you'll be okay?
Absolutely,
Are you going to increase the property size, and would they take a lot of time with permits at all?
No, so the scope of the project, initially I wanted to convert it to a duplex multifamily since it's so close to San Diego State. There's a huge demand for rental properties in the area. But after doing the numbers and just the amount of permits and modifications we would need to do to the property, we wouldn't be done with the project until the school semester was well on its way. It started. So my goal in this project was to get it on the market before the semester starts, which is in late August. So given, I have to change my scope of work, instead of doing a duplex or converting it to a duplex, doing the addition, what we're going to do is just work with the actual square footage that we have. Which is 1,600 square feet, and we are going to modify one of the large dens in the property, and we're going to create another bedroom. So we will have a permitted 4th bedroom, but we're going to stay within the footprint of the house, which means we don't have to do an extensive plan review. It's going to probably most likely be an over-the-counter type of approval for the permits.
So are you still shooting to complete by the start of the semester?
Yes, so I have 3 quotes from contractors. One is a preferred contractor that I've worked with in the past, and he's at 6 weeks. The other guys are at 8 weeks. So we're within the 6 to 8 week range to get it completed. The house itself is not in bad shape overall. It's just, it's been used as a college rental for years, so you can imagine how nice it smells and how beat up some of the finishes are. But other than that, it's not many huge modifications that we'll have to do, including the kitchen. Actually, the cabinets were recently replaced. The would say about a year and a half ago, so they're in good shape. It's just basic updates on carpeting, flooring, and the only large part of the construction is going to be adding that bedroom with permits, and some exterior work, patching up, stucco, painting, that sort of thing.
Okay.
Any other questions?
Thank you, Giovanni.
No problem.
George Flint, are you on the line?
Yes, I am.
Okay, do you want to give us an update?
Yes, 1222 Merlin's Vista. Project deal has not closed yet. We had a slight delay due to some issues on title. We feel confident everything will come through. It's just the first company we had selected for doing the title insurance just couldn't grasp what was going on, and added the fact there was a typo on the lender's instructions that threw another curveball on it. So right now we are working aggressively with First American to get that all squared up and taken care of. And we had a meeting today with our architect and GC team to review the second conceptual drawings. They look really well, and we're just working hard with them to get that dialed in so that they can move on to construction documents and structural documents so we can go ahead and submit to the city. And that's about it on Merlin's 2.
Hey, George, didn't you have another deal that's very much like Merlin's that you were looking at?
Yes, great question, Kevin. So we do have another deal actually right next door on the other side of this other street, and we have that under contract, and it's a similar deal in the fact that it's right next door. It's also similar in the fact that the play on it is to double the square footage up to about 4,000 square feet. It sits on the street below us. I mean, we literally share a fence line between the two properties. And the play on that is that it's the one house on that street that has the biggest backyard, or flat backyard, I should say. So we see huge value on that, and doubling the square footage and a rooftop deck on the first level that we will not be adding a second story on. And we just actually met there at the site today with our GC and architect team, and everything's looking good on the preliminary numbers. And for this one, you're looking at similar returns as you do on Merlin's, a little less equity capital required, only about $700,000 or so, give or take $20,000. And the best part about it is we'll get economies of scale having two projects right next door to each other that will save both projects some money. And the downfall on the second deal is that we have a really quick contingency period. So we need to get our ducks in a row as far as commitment from you guys. And the upside on that, though, is we don't have to close till September 30th, and we can close as late as October 30th. I believe I'm doing it off memory. I believe it's closed as late as September 30th and closed as late as October 30th. And what that allows us to do is it allows us to process paperwork with the city to eliminate time of money just sitting there and holding costs, driving down our returns. And we're very excited about that with the flexibility of the seller. And I'm going to actually be speaking with Kevin and John in more detail after this call today to dive into the details of the deal to make sure it's a fit for you guys.
George, how is the first project that you were about to finish construction there? Is it on the market yet?
No, we are about 45 days away. We just actually had a meeting on site yesterday with our broker team and our builder partner. And we went over the project. We're making some modifications to the project. Two things we're changing is, one, we're moving the location of the jacuzzi, and two, we had designed it before where we were going to have Jack and Jill bathrooms upstairs, and we decided that we're going to have each bedroom have their own bathroom. So it's going to cost us a few more bucks and maybe a little more time, but we feel that the separate bathrooms are going to bring more value to the property. And we're looking at shooting for end of July, beginning of August to have it 100% complete, but we're going to release the house for sale off market, not on MLS, in about a month, middle of July. And based on how the market is doing, our listing broker, Maxine and Alan, feel very confident that we will have this in escrow, shortly after completion date.
Okay, George, we should talk afterwards.
Yeah, definitely talk afterwards, and I appreciate the time, and we'll go from there.
Okay, I think we're all done with updates. Does anyone else have any questions or anything to bring up?
Olga, can you and John and I talk afterwards? Can
Sure.
we hang on the line?
Yeah, I think we can. John, I don't know if John is on because he was in and out of the call. But we can get a hold of him. Thanks everybody for coming on the call today, and we'll see you again next time. Have a good day. Back to you. Dr. Why don't we get off the call and we can just do a conference call with the three of us. I'll conference John in and you. Back to you.